Let's talk about dark shorts. In the screener, you can access them by selecting OTC blocks. Dark shorts represent shares sold short in dark pools, private trading venues where large institutional investors can buy or sell without immediately revealing their activity to the public market. This allows us to see where big asset managers and hedge funds are positioning and helps identify potential price reversals or rallies before they show up on the main chart. Think of it like a way to peek behind the curtain and see what the smart money is doing. On the platform, there are two ways to view dark short data. The first option is through the navigation panel where you can open the dark short widget. The second option is directly on the chart. Just open datasets and select dark short and dark short slope. Both views display the same information, showing short-selling activity happening in dark pools, including reports from market makers on their naked short positions. Now that we've opened the dark short data, let's look at what it actually represents. For example, if a fund manager buys $100 million worth of a stock like IBM on an OTC platform, the market makers may either have the shares to sell or sell them short. If they sell short, they must report this to regulators, and that reported volume becomes the dark short. It shows where buy-side investors are building positions and how market makers are acting behind the scenes. Intuit Incorporated. Here, the dark short percentile is at 100%, meaning it's at the highest level compared to the past year. The current dark short volume is around 58.23%, while the price slope is negative at minus 198.64%. At the same time, the dark short slope is slightly positive, around 1.51%. That divergence between a rising dark short and a falling price can often signal a potential reversal. It shows that while the price is still moving down, institutional activity is increasing, which may indicate accumulation before a bounce. Now, let's talk about the dark short slope. The dark short slope indicates the slope of dark short activity over 5 or 10 days. It acts as a leading indicator, often signaling changes before the actual price or volume moves. By watching the slope, we can see shifts in institutional positioning early, which can help identify potential rallies or reversals before they appear on the main chart. For example, here we can see on the chart that the dark short slope, red line, starts rising while the price is still relatively flat. This tells us that institutional investors are increasing their positions before the price reacts. A few days later, the price begins to move up, confirming the signal from the slope. So, what can we do in the screener? For example, you can filter for stocks where the 10-day dark short slope is positive. This helps you focus on stocks where institutional investors are increasing their positions, potentially signaling an upcoming rally. The second metric we want to look at is the dark pool percentile. This shows how current dark short activity compares to the last year. A high percentile, for example 80 to 100%, means that dark short activity is unusually high compared to historical levels. Here on the chart, you can see the percentile value at the top of the screen. For instance, when it reaches 100%, it tells us that institutional short-selling activity is near its highest level over the past year. This can help us identify stocks where major investors are very active, which could indicate a potential upcoming move in the price. Next, let's focus on the 5-day dark short change. This metric shows the percentage change in dark short activity over the last 5 days. For example, if we see a 20% increase over 5 days while the price remains relatively flat, it can indicate that institutional investors are piling into the stock, potentially signaling a rebound or rally before the price reacts. Now, let's talk about divergence. The divergence number measures the difference between the price slope and the dark short slope. When both slopes are moving in the same direction, they are in sync. But when one slope is positive and the other is negative, they are diverging. Divergence often signals a potential trading opportunity. First, we'll select the 10-day price slope. This shows the recent trend in the stock price over the last 10 days. Next, we'll select the 10-day dark short slope. By having both slopes visible on the chart at the same time, we can compare their directions. This will allow us to identify whether they are in sync, which confirms the trend, or diverging, which may signal a potential opportunity before the price reacts. Here we can observe a divergence. The price slope is trending downward while the dark short slope is trending upward, indicating a potential reversal opportunity. So the benefit is that this lets you see what institutional investors are doing and anticipate market moves. By detecting dark short activity, its changes and divergences, you can identify potential stock turnarounds, pinpoint rallies before the price reacts, and focus on names with significant institutional flow. Using all these metrics together provides a powerful tool to understand hidden market activity and find trading opportunities. Thank you for watching. Enjoy the platform and don't forget to do your own research.